So if you're getting into trading, maybe you're a new trader, you started in the past couple of weeks, or maybe even this week, or you could be a trader that's been trading for multiple months, if not years, but you're just not quite there. You can't find profitability, you can't find something that works, you seem to be going in the wrong direction with every decision you make. Well, this video is definitely for that sort of person. Every trader can obviously learn from another trader. I feel like a lot of people think they can only learn from the best traders in the business. So even the best traders out there, like some of you might be better traders than me, I feel like you can still learn from the points I actually make in this video. Everyone sees something from a different point of view. Everyone has actually had different experiences, especially with trading. And as everyone trades differently, they use different risk, they have different results. It can definitely be good to learn from other people. So in this video, I'm going to give you a few different ways that you can actually reset your trading. And when I say reset, I mean cut out some things from your trading, maybe add a few more things to hopefully get you to that next level where you start making consistent profit. It's not going to be any overnight fixes. So you're not going to watch this video, implement the steps tomorrow, and all of a sudden you're going to see profit. If that is your expectations, quit trading because it's not for you. And I'm surprised you've actually got this far in the first place. You need to accept that it's going to take a while for you to see results. No matter where you learn, no matter who you learn from, no matter if you have the best strategy possible, because of your lack of experience, because you haven't been profitable, it will take you a while to pick up a strategy, to work out risk management, work out trade management, work out how to deal with drawdown, how to deal with profit streaks. All of this comes with experience. So if you haven't got experience in the markets, don't expect to get the same results as someone with multiple years of experience in the markets. And I could make this video 2 hours long. I could outline every single possible thing that you could be doing wrong in your trading, but you don't want to sit through that. And the hard part about doing videos like this is I don't know your individual struggles. I don't know what one person struggles with, what another person struggles with. There might be something I missed in this video, but I'm going to cover what I feel like are the most prominent things that people make mistakes with in their trading, and I feel like ones that are relatively easy to fix. There are going to be a lot of things in this video that can be quite a quick fix and something that you realize you're not doing and then have that light bulb moment of, oh my God, why did I not do that previously? And I hope that is the case, that it is quite an easy fix, but a lot of people will kind of resonate with the harder fixes in this video. And make sure you watch until the end so you don't miss a single step to hopefully take your trading to the next level. So we're going to move to step 1 now, and this is to quit any other ventures that you actually have. And this might sound quite extreme for the majority of people listening to this, and this is something I've talked about quite a lot on my second channel. So a channel I just make raw, uncut videos on that channel, and I've talked about how you need to have 100% discipline to succeed in trading. And I still think this is 100% true. The main reason why a lot of people don't make it in trading is they treat it like a part-time job. They treat it like something that is on the side. A lot of profitable traders, they went all in. They went 100% focused on trading. I'm not saying right now you should go all in, quit your job and go into trading, because that would be a very, very dumb thing to do. But if you are working a job and you're trying Forex, you're trying dropshipping, you're trying marketing, you're trying FBA, you don't want to be doing this. You just want to pick Forex, if that is the one you're actually going to choose, and stick with Forex. If you have split focus from dropshipping, Forex, like the other previous different methods of making money, which I actually mentioned, I feel like your chances of succeeding in trading are very, very, very slim, especially as it is so hard to actually make money in trading. You've probably seen the stats that 90% of traders lose money and they will never make any profit. The stat is probably a lot lower for the people that actually put in 100% focus. That stat that's released by brokers is kind of misleading, and I'm going to tell you why. So let's say I am a new trader. I've never traded before. I open up a broker account, and with a broker I found online, I deposit £500. I trade for 3 weeks. I blow the account, and then I don't come back to trading. I am a losing trader if that is the case. Did I put 100% focus into learning to trade, learning my strategy, developing an edge, collecting data? No, you're still going to be classed as a losing trader because you lost money from trading. So the stat is quite misleading, and it would be quite interesting to see after 3 years of trading how many people actually make money. Because I feel like the percentage of people that make money will obviously be a lot higher in comparison to just in general but I feel like that would be the case with any business anyway. So the main reason why I say to quit other ventures is because with trading, you kind of have to treat it like a job or a business. And people often say to treat trading like a business. And I feel like this is the best way to put it, because any money you've invested into either trading, courses, money into your trading accounts, or buying prop firm challenges, all these are technically just business expenses. So the way I look at it when I'm trading with prop firms, especially, that challenge fee of whatever it is, £500, £1,000, it's just a business expense because it's investing into more profits, hopefully. And if that investment actually plays out, we can make 5, 10, 20, 30, 40,000 from that initial investment. So treating it like a business means that you have to have 100% focus on it. You can't just give 10% of your effort to a business and expect it to succeed. That would be very, very stupid of you. To give 100% focus means after you finish your job, after you finished whatever it is that makes your main income, that's when you only focus on trading. You put in hours consistently, every single week, every single day, ideally. I know it can be hard for a lot of people when they are working jobs, when they have families, when they have other commitments. And I know that this is the case for a lot of people, especially people that have full-time jobs. Part-time, it can be a lot easier, but you need to be putting in the hours. You can't expect to get the results if you haven't put in the hours. The best way I can put it is it's like being a football player. You can't just have the best coaches, i.e. courses, education, resources in trading, and expect to suddenly be like Ronaldo. This is not going to be the case. You can have all the talent in the world, all the resources, and it doesn't mean you're going to be the best. You need to put in the hours. You need to gain the experience, the match experience, which we could relate to experience in the markets, entering trades, managing trades, exiting, journaling, all these things that you actually need to get experience from. You can only actually get good at them from trading, from backtesting, from seeing your strategy appear so many times that it's just second nature. When you see a chart, is there a trade? Nope. Okay, done. Is there a trade? Yes. Take the trade. Done. That's the point you need to get to in your trading, and I feel like you can only get there if you are giving 100% your focus to the markets and to developing your edge in the markets. So moving on to step number 2, and this is focus on one of everything. I've done whole videos on this previously, so I'm not going to talk about it too much, but for the new people on the channel, and for the people that maybe haven't heard it as much as I usually talk about it, I feel like one pair, one time frame, one session, and one setup is the way to go. And I'm going to tell you why. So when I actually started trading, I fell victim to having the full watch list on my trading view. So every single pair that I could actually think of was on my watch list. I was trying to enter as many trades as possible because I thought the more setups, the more trades, the more profit I actually make. But I was wildly mistaken. When I actually switched, and I can't remember who I actually saw do it, it must have been someone trading with one pair and one setup. And I was like, okay, this actually makes sense. Because if I'm only trading with one pair, I don't get distracted by other pairs. I won't miss any setups because I only have my eyes on one pair. And if I only trade with one setup, it means that if I open the charts, I can quickly see if there's going to be a setup or not. This is obviously made a lot easier by the fact I was only trading with one time frame as well. So I'd open the charts for me, GBP USD. I'd open the GBP USD chart, the 15-minute time frame, and I'd look for my setup. Because I'd seen it so many times and I was only focusing on that one setup, I could tell immediately if there's going to be a trade or not. And the beauty of it is I could be done trading within 15 minutes if there was no setup. So if there was a setup, good, I set a limit or I set an alert near the area. If price tags in, perfect, we let the trade run. If it doesn't, okay, cancel the limit and on to the next. It was as simple as that. This was also made even easier by the fact I was only trading one session. This session was London session, which is in the morning for the traders in England, like I am. And I narrowed it down even more to a 3 to 4 hour period, depending on if there was a setup or not, and depending on where price was. So if price was near an entry, boom, I get into the trade. If price was nearing entry during that 3 to 4 hour period, then I would get into the trade. And the reason I feel like a lot of traders don't do this is because it doesn't provide as many setups as trading with multiple different pairs, and they don't like this. You often see new traders, if you look at their accounts, you look at their data, there's so many trades. There could be 20, 30, 40 trades in a single day. They're just trying to get into the trades. They're trying to make money. They don't want to miss any move. And this is the wrong way of going about your trading. If you're only focusing on one pair, it might only give you 3 or 4 setups in a month, which is around 1 per week. But you know, because you've mastered that pair, you've mastered that setup, you've mastered that time frame, that your chance of winning that setup is going to be a lot higher. You don't go into trading with a lack of data on your strategy. And because you're only trading with one pair, it's a lot quicker to actually collect data and test your strategy on one time frame as well. With one setup, it can be relatively easy to test, which means that I feel like less human error. The less human you make your trading, the better it can be. You want it to be, okay, here's a list of what I want to see. If I don't see those things, I'm not entering. This is made a lot easier by only having a few different things to actually look at before you enter a trade. So obviously simplicity is good, and simplicity can be a factor in why you should switch to one of everything. You could add another setup because maybe the way you trade, you use low risk, you're not getting as many setups, you can't pass prop firm challenges, you can't make the percentage you actually need to live. Great, you could probably add another setup, add another pair, but test it and see if it's actually profitable. See if your trading will actually take a change for the better if you actually do this. Don't just add more pairs, more setups just because you want to make more profit when you don't actually need to, when it's going to actually lose you money in the long term. And this kind of brings us on to step number 3. And this is to prioritize consistency. A lot of traders preach about making this much in a day, this much in a week, this much in a month, but this is all good. You're making good profit, granted, but can you do this consistently? That's all that really matters in trading. You'll often see people that are at the top of leaderboards on prop firm challenges. They'll be making 100k, 120k, 150k profit in a single payout, but where are they all the other months of the year on that leaderboards? They kind of get a fluke payout, and then they market it as this is what I've done, and people lap it up. They buy their courses. The true consistent traders, you won't see them making 150% in a month. You won't see them making 50% in a day, like a lot of these traders actually claim to make. But I feel like it's more impressive if a trader can show me they're making 2-3% per month consistently for a year, 2 years, 3 years. Because the beauty of this is in the long term, it will actually add up to more profit. As you guys know, the great Warren Buffett often talks about compound interest being the greatest thing in investing, in trading. And I feel like this is very true. The best way to actually grow your account is through compounding. And this means that you're not withdrawing any money, you're just depositing and then growing. So if that's 2% per month, it's not going to be 24% in a year, because you're going to be risking more every single month as the account size grows. So even if it's small gains, it all adds up over time. You know, you can turn 10,000 into millions in 30, 40 years, as Warren Buffett has done himself, into billions. It will obviously take a lot of time to compound, and a lot of people don't want this, and this is why they will never make money consistently long term in trading, because they're not satisfied with making 2% in a month. And I'm going to talk about why. The main reason why people don't like doing that is because they're not making as much profit as they think they should be making. So if you make 3% in a month, for example, it doesn't seem like a lot if you are trading a £1,000 account. You know, 3% is only £30. Whereas you compare this to the trader that has prop firm accounts. He has his own personal accounts. The prop firm accounts are at 500k, let's say, for example. They have a 500k funded account and they make 3% per month on this account. So you have your £30 on one account. The other trader has larger capital, but they're actually performing the same trading wise. 500k trader is able to make 15k in that month. So the only thing that's actually holding a lot of traders back is their capital. You can be a really, really good trader, but it can lead to mistakes because you're not making the profit you think you should be making because your account size is small. And with the opportunities that are available currently with prop firms, I feel like this isn't a great excuse for a lot of people that used to use it as an excuse that they can't become a full-time trader. The opportunities are there. If you can trade on your personal account, if you can make the profit on a smaller account, you can definitely do it on a larger account too. But if you can't even manage it on a smaller account, making 3% consistently or even 2% consistently, then don't expect to make it on a larger account when you get to that level. So this brings us nicely onto the next step, and that is that you should lower your expectations. So we obviously have those lofty expectations of making 20% per month consistently. Is this going to happen for the majority of people watching this video? Definitely not. And a lot of people will say, oh, well, if I make a 1 to 5 only 4 times a month, then I can make that. But how many times are you going to do that without any losses? How many times are you going to win 4 trades in a row with no losses? The chance of that happening every single month is very, very slim. But people get into trading thinking they have to make these large amounts of profit to make a living from trading. If you're thinking about it like this, if you're trading with a 400k account, for example, and you want to earn the minimum wage, then you only have to make 6-7% in a year to earn the minimum wage. So you make 6% in a year. If you divide that, it's like 0.5% per month. So if you're earning minimum wage at the moment and you're looking to trade full time, can you make 0.5% per month on a funded account? I feel like a lot of traders, if they're at that level, they could quite easily do that. So you don't need to make 20% in a month. You don't need to make 50% in a month. But people go into trading with those expectations, and then when they actually don't reach that amount of profit, they go in with extra risk. They enter more setups because they feel like they should be at a certain level. And I feel like the main reason this is fueled is from Lambo traders. So the people that buy the nice cars, live the nice lifestyle, promote it as something that they should be able to do as well if they put in hard work, and they feel like they're putting in the hard work, they're not getting the Lamborghinis, they're not getting hundreds of thousands of pounds in profit, so they go in with extra risk. And this is mainly because their expectations are way too high of where they should be in trading. This is often preached about online, that you should have these massive goals of becoming a billionaire in the next 5 years or making this much per month. But I feel like in trading, this isn't the right mindset to actually go into it with. You should obviously have goals in your trading and in your life, but to have profit goals like that can be quite detrimental to your results and your performance. It can lead you to make emotional decisions if you're not quite at your profit target, or if you're nowhere near your profit target for a month. And this also can be quite bad if you have expectations of replacing your salary or replacing your full-time job. If you're not making the profits, then again, you can make decisions that aren't justified by your trading plan, which then leads to loss of profits anyway. So I would say to go into trading with low expectations. So what I expect from my own trading is over 1.5% per month in profit. And this might seem crazy for a lot of people because obviously I make quite a lot of profit, but if I go in and I make profit for the month, 1.5% or 2% profit, I'm happy because I know that I finished the month in profit. I know that if I do that consistently long term, that will compound to a large amount. I'm beating the S&P 500 by making 1.5% per month, which is known as the best investment you can possibly make, one that has historically made profit long term every single year. So I know that if I actually do this consistently, I'm beating the markets, I'm beating the average hedge fund, and I'm doing really, really well. But that might seem very, very low to a lot of people watching this video, but I feel like it's a perfect thing to have. If I make profit, that's good. I've had an amazing month. It's as simple as that. Moving on to the next step, and this is to focus on the basics. By basics, I don't mean Googling on baby pips, what is a pip, or how to trade support and resistance, which I feel like a lot of people think the basics that I'm actually talking about are, but this couldn't be further from the truth. Those obviously are basics, and you need to know the basics of trading, but when I'm talking about focusing on them, I'm talking about risk management, trade management, position sizing, all these different things that people neglect when they're actually trading. If you ask an unprofitable trader to see their trading plan or their previous trades, they're usually quite reluctant to show you, mainly because they have no structure in their trading. They have no risk management. They have no trade management. You'll see wins of various sizes. You'll see losses of various sizes. There's no structure in their trading whatsoever. So how would they even expect to be profitable? Until someone actually picks them up on this, or until they realize the mistakes they're making, it'll just keep getting worse and worse. I feel like risk management is the number one factor why traders can't be profitable. And this is obviously led by emotions and the psychology behind trading. So if you go into trading knowing that the trade is going to win or lose, then it would obviously be a lot easier because you can prepare for it. But we go into trades knowing that the outcome isn't promised. We don't know if that trade is going to win. We don't know if that trade is going to lose. So you need to adjust your risk management according to this. If this trade does lose, is this the perfect risk for the trade? Yeah. Okay, perfect. I'll enter the trade. If I win this trade, is this the amount I want to win? Yeah, perfect. Good. It's not about, okay, this is how much I want to win, this is how much I want to lose. No. It's how much your strategy should risk. A lot of people actually DM me or comment on my videos. I have a 100k account. What lot size should I use? And I don't even reply to the messages because I'm thinking, you have no clue. You have absolutely no clue. You've clearly never learned about risk management. You've clearly never even researched risk management. Any YouTube video that talks about the reality of trading will say about risk management. And I feel like a lot of people neglect it. The way I personally trade, I'm going to give you a little insight here. I'll only ever use 1% risk. My personal trading accounts, it's always 1% risk. I have 1 to 3 risk to reward. So I know every single trade I actually enter, it can either lose 1% or win 3%. So if I know how many trades I usually take on average per month, I can work out how many trades I could potentially win over the year and how many trades I could potentially lose over the year. And obviously from collecting data on your strategy and journaling your previous trades, you can have a good idea of what profit you actually expect to make every month or every year on average. So by going into trades knowing exactly how much I'm going to lose and how much I'm going to win, it's great, because I know that worst case scenario, this trade loses, I lose 1%. Big deal. Wow. 1% loss. It's not the end of the world. It's not something to even get caught up on. Whereas if you go into a trade and you think it's a really, really good setup, so you do 4% risk, but then the next trade, because you just lost 4%, you only risk 1%, so now you win and it's only 3%, it's a complete nightmare, because you don't know whether you're going to win or lose, so why would you risk more? It doesn't make sense. Obviously, there are going to be setups that could be higher probability, and maybe you add an extra 0.5% or an extra % risk. But if you haven't tested this, if you don't know that on average this setup produces more wins than the other setup, don't go into the markets with unknown risk. So you're not knowing what risk you're going to put on the next trade. This can be quite dangerous. And moving on to the last step, and it's quite simple, 3 words: compound, compound, compound. The main reason why I say it 3 times is because I'm just trying to emphasize it. People neglect compound interest. I talked about it previously in this video, but it had to have its own topic. It had to have its own step in this video because I feel like it is so important. You can't expect to make money long term if you're not compounding your account. Obviously, you can make profit, but our main goal is to scale our accounts. Our main goal is to grow our accounts. Especially if you're trading with a personal account, I wouldn't advise scaling a prop firm account or compounding it, because you want to get your money into your bank as soon as possible. And when it goes into your bank, you can then funnel it into your investments, into your personal trading account, your expenses. Personal trading account is a very good way to actually invest your money. If you're a profitable trader, if you're beating the index funds anyway, why not make money? Why not invest money every single month of your other profits and just grow it? You don't need to withdraw money from your personal account unless trading is your only income and it's something that you solely rely on to make money every single month. Then why withdraw? Why withdraw from your account? If you make £300 profit, great. Now you have a £300 buffer that you can actually risk. By keeping money in the account, you have the buffer. It means your wins will be bigger, your losses will be bigger too, but the wins will be bigger as well. And our wins should always be bigger than our losses anyway. The account will grow over time. And as we know, the power of compound interest is unbelievable. You watching this video have probably put your results into a compound interest calculator and seen that you could be a billionaire in a year's time. We know this is unrealistic, but the effects of compound interest are definitely there and they should not be ignored. And lastly, it is the best way to grow your money, especially if you are beating inflation. If your money's just sat in the bank, it's not going to do anything for you. If it's in a trading account, you're making a couple of % per month, you're going to be laughing in 10 years' time when this account grows to millions and millions of pounds. So if any of these steps did actually help you in your trading, comment down below something that you've learned from this video, and I'll catch you guys in the next one.